Hi, my name is Paul Westhouse, President and CEO of Western Copper and Gold. Western Copper and Gold is developing the Casino Copper Gold project up in the Yukon. We've been developing this project for about a dozen years, but the past 3 years and actually the past 1 year have been by far the most exciting in the company. We just issued a feasibility study. We brought in Rio Tinto a little over a year ago. Been working very, very closely with them. This represents one of the largest undeveloped copper gold projects in the world, located in the Yukon in Canada. Great project. Very happy here to talk to you about it.
It's all so slow, isn't it? 12 years. Oh, man. How do you keep the tempo up? What are you up to?
Yeah, I think that the one thing is that as you're aware, you've got commodity cycle, right? And so if you go back, we were very, very close to selling this project. A lot of interest in 2011, the last time that sort of copper was over $4, and then you got to wait for the copper cycle to come back. It's back now. Some very, very good fundamentals behind it, and sure enough, copper price goes up, and everybody starts to get interested and knocks on your door, and hence the deal that we signed with Rio Tinto.
Right. Okay. So I'm kind of referring to 12 years, and I get the cycle component. I think everyone listening to this needs to understand the kind of cycle component in terms of pricing of copper to allow you to move forward. But you've had Rio Tinto on board for a while now, right? So remind me of the kind of scope of that agreement, and remind me how quickly they get to the next stage of decision making.
Yeah, so we signed the agreement with Rio Tinto in May of last year, so it's really not that old. It's not even 18 months, and it was a different sort of agreement. What we agreed to in the agreement was it was Rio coming in saying, we need to do big company due diligence on your project. We want to go in there. We want to drill it where we want to drill it. We want to do met work that we want to do and all that stuff. So that was the agreement that we agreed to. 18 months was the original term. And where are we now? The drilling's been done. The metallurgy is 99% done. I'm waiting for the report to be finished, but the results from the met work are indicative of what we've done before. No surprises there. Lots of work on First Nations and government relations and all that sort of stuff. So we set it at 18 months initially because we thought that would be enough time to finish the work and sort of get a feel for how things are going to go. That's the end of November. We've got a couple months here. Lots of discussions underway. We'll sort of see what happens in terms of next steps.
Okay, lots of discussions underway means different things to different people. So are we going to be still sticking with the 18-month time frame? Do they make a meaningful decision before the end of this year that's going to get the market excited, i.e. they continue working with you or continue working towards understanding what it is that you've got?
Yeah, so there's sort of a couple of paths. So first of all, the 18 months is over at the end of November, and at that time they lose a number of rights. There's a technical committee. They lose that right. They have the right to second people. They have a board observer. All those rights disappear. There is a one-time right for them to extend that by 1 year. So that is one option that they have at their disposal. The idea is that they are going to obviously make that option if they like what they see and they think that there's something promising here moving forward. So we actually haven't started to talk about that. We've just been sort of finalizing all of the details around actually mostly the MET program and work with the government and the First Nations. But those are the next conversations that are going to begin to happen.
Right. Okay. So you've got a big project. We talked about this many, many times,
Yes.
you and I, in terms of the amount of copper that you've got on the ground, pounds on the ground, and the amount of gold you've got on the ground. And there's only going to be a handful of companies perhaps equipped to, deal with the capex required to extract that value from the ground. So with the Rio Tinto project, they're getting on and doing their stuff. That you're working with them, and you've got to get on and do your stuff because you've got to create some competitive tension here. Because if it's a one partner, one hit, one opportunity, you're in a world of hurt and pain if Rio walk. So tell me about the process with Rio. So they've got till November. Then they lose some rights potentially, or they extend by another year potentially. is there a kind of period of grace where you kind of both work out, well, perhaps we slightly tweak these terms? Do we have a new way of looking at
Yeah,
it? Because
I mean that's a possible. I mean, really, the discussion is. I mean, what you're suggesting is exactly what we've talking about, which is what is the next business combination look like? Is it Rio buying us? Is it a joint venture? Is it something else? Right. So, um, I mean, what we've sort of said and what we've talked about is, and this goes back to our old chairman actually, who just got inducted into the Canadian Mining Hall of Fame, Dale Corman. He doesn't like joint venture agreements, and it's really more if you like it, buy it, and then you can do whatever you want with it, sort of idea. But I mean, never say never. I mean, I think we would be open to sort of whatever discussions on that. But I mean, it's a good point that you make about a couple of things on competitive tension. I mean, as you said, I mean, the story around copper is a big story right now. We've got a good board that's done this a number of times before. So, certainly we're excited by what's going on with Rio. We're getting along very, very well with them. But, this is also the opportunity to make sure that we've knocked on all the doors, not just theirs. And it's interesting, some of those conversations. I mean, yes, some of them are large companies, but then there's also some sort of, let's call them more mid tiers, that are sort of like saying, well, maybe I can sort of, we can partner up on this sort of thing, because big copper asset, but also 21 million ounces of gold. So you get some interest from the gold space as well as the copper space in terms of moving this forward. And the gold companies, if you look at the gold space, they're sort of, even the larger gold companies are still not the BHP and Rio Tinto size of the majors in the copper space.
yeah, they're a long way off, as are their balance sheets. But that's the kind of the big red flag here. For you guys, then there's the problem, the narrative that you've got to change or help people understand, which is, if Rio don't, what do you do? And I appreciate you can't tell us all the conversations you're having with Rio at the moment because you haven't agreed anything at the moment by the sounds of it. But help us with some indicative components. They were due to spend just over $25 million. Have they spent, or will they have spent $25 million by the time it comes to November?
Well, so just to back up on the agreement, it was a little bit different. It wasn't like an earn-in, buy-in thing. They gave us $25 million sitting in our bank account, literally. So it was private placement. So, and if you go back to that time, I mean, why was it $25 million? The scope of work we agreed to was for about half of that. So they wanted to do about $10-11 million worth of work. But, they need to buy a meaningful amount of shares. So they ended up with 8%. Of course, we were like, it's got to be meaningful, but it can't be, we didn't want to give them too much, and to ensure that there is, an opportunity for somebody else that would be interested to come in. So, but in terms of the work that we agreed to as part of that original scope of work, like, I can't emphasize this enough. We are a month away from that being, or a month to 2 months away from that being completely done. So, I mean, it's good. I mean, it forces the conversation of what's next. The November deadline forces the conversation of what's next. Because, I mean, I think one of the things that you can appreciate with these large companies, they got a lot of stuff going on. I mean, we're dealing with the Copper Group. The Copper Group obviously has been a little busy with the process of buying Turquoise Hill. I was very happy to see that looks like it's reaching a conclusion here. So, that will hopefully allow them to turn some more attention to us as maybe the next thing. So
right, okay, so it was 50% of the 25, which was due to be spent, invested in the ground, as it were, or invested in the project. As it were. Okay, understood. So I thought it was the full 25. Okay, so they're sitting at 8%. If they move forward, and whether it be on the 1 year extension term, or in some way, shape, or other form, they can acquire more of the company. I mean, but again, just remind me what it could look like going forward in terms of the steps, right?
They don't have a right of first refusal. There's no process for them. I mean, it's after that, it's let's sit down and negotiate, right? So they have, I mean, the only right they have is the right to extend it for 1 year. And yeah, I mean, if they feel like there's more diligence, although that's not what we're hearing from them, if there's more things they need to do in order to get themselves comfortable with a bigger investment, then we can talk about that, and will have the technical committee, and they'll have the board observer for another year. After that 1 year, they're absolutely done. Then it's like, look, if you guys are interested, let's sit down. But there's no rights on that. It's just let's sit down and across the table from each other and talk about what's next.
Okay, so you've heard from them; they're not looking to extend the diligence period. You've not heard that. Doesn't
Well,
mean it won't
no,
happen.
I
Doesn't
mean,
mean you've
what
not heard
I'm
it.
hearing from them is that there's not, we're not getting, I mean, there's always more diligence that needs to be done. So I'm not trying to suggest that they're saying, look, we've dotted every I and crossed every T. I mean, but, we're not sort of hearing, okay, we got a whole bunch more work to do. And, oh, the drilling, raise more questions than answered. That's not what I'm hearing.
Right.
Met
Okay.
work, raise more questions than answered. Not hearing that. I'm hearing the opposite. I'm hearing like, yeah, we're pretty happy with where things are at.
Good. I'm glad that I got that out of you. And also, you know that Dale doesn't want to do JVs. He wants a sale. If you're interested,
Now,
buy
he's
it.
not the chairman
Right?
anymore, to be fair, but he's still
He's not the chairman.
he's still a pretty big shareholder.
Former
So.
chairman. Yes, correct. Former. I should have read that more clearly. Okay, so that's kind of interesting to me. And in terms of so there's some indicative clues. Some indications of intent and some clues. I want to keep going down that track. The feasibility study on Casino Project. How did you do that? Did you sort of tip your hat towards, well, maybe if Rio doesn't go ahead, we're going to need to divide and carve this thing up in a way where we can make it a much more acceptable CapEx solution for this, or was it pretty much the same as the pre-phase?
Yeah, so it was the same as actually our PEA, which we did a year ago, and there's a couple of reasons for that, and the main reason is that if you look at value, so if you look at net present value, the way that we've designed it right now, we have maximized the net present value. So that's a higher initial capital cost, but that maximizes the net present value. So we're now sitting at a net present value of 2.3 billion from the feasibility study, an IRR of 18.1%. Now, why that's useful is that, I mean, our value as a company should be based upon the net present value of the project, right? So we want to make sure that we maximize that net present value of that project. And also, I mean, it depends. It's sort of like I'm going fishing. And, am I fishing for the big guys, in which case I'm putting out the big lures, or am I fishing for the little guys and I'm putting out the little lures, right? So I think right now we're interested in attracting big companies to this project, or like I said, maybe, a couple big companies working together. If it's a small company going through this, actually, one of the things that we did do just really quickly is we said, look, can you get in here, start smaller and wrap it up? Of course you can. And actually you can do that and maintain a very, very similar IRR. However, now you're giving up net present value overall on the project. It's just sort of, the way that the economics work. So that's why we sort of stuck with the way that it's gone forward. We think it makes the most sense. Keep in mind with our feasibility study at that size that we've done it at, that is a 27-year mine life. That is 1/3 of the deposit. 1/3. So, I mean, you could argue that we're started small. I mean, this is an enormous deposit, right? So, and yeah, I mean, it's 3.6 billion Canadian is the capital cost on the project. If you look at, copper projects that have been built recently, you look at something like Quellaveco, I think it was 5 billion, Cobre Panama going back a few years ago, that was 6 billion. I mean, this is a small copper project in the world of copper projects.
So there's two things there. I guess the multi-decade component to it for 1/3 of the property helps with amortizing the cost over a longer period of time. Because right now, if you don't have that, it seems to me you've got projects around the globe. I'm not talking copper specific, I'm talking mining generally, where companies are blowing their brains out on the capex costs. To go from one feasibility or economic study to the next, the numbers are changing radically. We've seen 30, 40, 50% change. It makes it prohibitive. So do you consider the multi-decade component an advantage for you?
I mean, so a couple of things, just while we're going to geek out on numbers and economics, which
Yes, please.
I love to do, so there's a couple of things. I mean, first of all, with our project, one of the things that is unique about the project, and actually, I mean, it's one of the things, having beers with the Rio guys, that they told us, like, this is your ace up your sleeve. One of the things that really attracted us to this is that you have this core zone in the center of the deposit that runs around zero point 0.7 copper equivalent, so double the grade of the overall resource. You start mining there, it's right at surface, so payback on the project's 3 years. I mean, almost unheard of, and it's that high grade zone. So that's one of the things to file away. And the other key thing, in terms of the project, is that when you look at that initial capital cost, it's only in Canadian dollars, right? So I mean, if you compare that and you look at that in US dollars, it's actually really, really quite a bit better.
It is, but it's still a big number. But I guess the thing I need to latch onto there is 3 year payback. I'm all good. I'm all good with that. Nevertheless, you need to get some competitive tension. There's only a handful of people out there in reality. Rio are in the front seat at the moment. But does that preclude others from even looking? I mean, are you having other conversations? What are people, are you going to make this feasibility study available, and will the data room available to others?
I mean, yes. yes.
Good.
Let's just leave it at that.
Glad to hear it. Glad to hear it. And again, I appreciate you won't be able to talk about it, but I think that's what people want to understand. That because if I look at your share price, when we spoke to you, you were at $3 back in April. It's come off a lot. We're going to put that down to what? Copper price coming off. We're going to put it down to market tension. We're going to put it, what are you putting it down to?
Yeah, I mean, it is really, it's just the market has come off. I mean, you saw copper price, really come off, and I think it hit a low about $3.15 this summer before it started coming back up to around 350, 360, where it's been here recently. I mean, we track, like I think all companies track, where our share price has been moving compared to our peers. We're actually doing, believe it or not, a little bit better than our peers. If you sort of stack them all together, again, I think we're doing a little bit better than our peers because we do have that. Okay, what is Rio Tinto going to do? Who else is looking at this? I mean, we're the 5th largest copper gold project that's controlled by a junior mining company. And, if I look at those 5, which ones have good economics or in good locations, have a good relationship with the local indigenous groups, we float to the top of that 5. So, I mean, I think those things sort of work in our favor. I mean, are we massively outperforming our peer group? No, but we're certainly doing a little bit better. And, I think it's an incredible investment opportunity. I mean, I think it's a weird situation right now in that, you have these beaten up development companies like ourselves. The long-term view on copper is as strong as it gets. And I mean, and there's no one debating that. No one's debating long-term view on copper. This short midterm, absolutely, but the long-term view on copper is just incredibly strong.
I know it is, but it comes back to the fact that you're at near as damn it your 1 year low. You're probably at your 3 year average, I'd say, give or take. People look to that and they've got to wonder why. Is it purely just tracking to copper price, or is it because you're not able to kind of show how you get out of this? You've got to show you get out of it. So I guess things take as long as they take when you're dealing with projects like this. So can you give us some sort of sense of next 12 months, the kind of the runway here? What more is to come?
Yeah, the first thing to realize, and every junior mining company faces this issue is cash on hand. And having a low share price is obviously not, don't want to have a low share price, but there's nothing worse than having a low share price and running out of money. The good news is I'd like to get our share price up, and that's certainly, one of the key things that we're driving. However, mid-year, we had a little under $40 million in the bank. Like I said, we've finished up this work with Rio, is 99% complete. Big push is on the permitting work. We're looking to get that permit application in mid next year. that work is about, maybe it's about a third done. It's not a huge thing. So I mean, we're talking 2-3 years of runway in front of us. So that's point number one, because like you said, these things take time. And I mean, with these large companies like Rio, like you have no idea how much time it takes for these things to happen. It's frustrating, but it is what it
Well,
is.
they've all been guilty of making big mistakes. So I
Yes.
guess they don't want
So
to
they
make
don't
any
want to
more
make
big
it.
mistakes. Okay.
Yeah.
But here's
Yeah.
the point I want you to answer, Paul, which is like, great, you got 40 million bucks, pays the salaries, right? Or it pays for things which are going to drive value creation for your company or put you in a stronger position to have a discussion with Rio or another about getting the price that you want. And it's going to presumably be way above your 3-year average.
Yes.
Okay. So what are those things? That's what I want to
Yep.
know. What are the things that are important?
I mean, there's one thing that's going to drive this, and that is actually getting the project permitted. I can do a whole bunch more engineering. I mean, does it need to get bigger? No. So it's about driving that forward. So what are we doing? I mean, if you look at where we're spending money right now in terms of the project, permitting, because we get that in, we start to hit those deadlines, we start to push that forward, and this becomes something that is, getting close to being shovel ready. And with this thing being shovel ready, I mean, so, let's talk a little bit about valuations. I mean, we're trading at, 10-20% of that NAV, that 2.3 billion. So as you get fully permitted, you should be trading somewhere around 50% of that NAV. You've sort of seen that historically. And, between now and then, you should start to see that sort of begin to move, presuming that we continue to have good news. So that's absolutely the key thing that we're moving on. I mean, the other thing is working really hard on the corporate development side. I mean, as I said, yes, and yes, in terms of, are we talking to people? Are we, trying to do stuff in that area? Are we making sure that there are no doors that we haven't knocked on? Absolutely. And so, I mean, obviously I can't talk a lot about that, but, that is also a lot of encouragement around that area as well. So, I mean, it's not just waiting for Rio Tinto. We can't do that. I mean, I think things look very positive with Rio, but we can't just wait for that. We need to make sure that we're working very, very hard on, these other options. And then in the background, push that project forward. Make sure that, if this is another year, which I hope it isn't, the next time I'm talking to you, it's like, yep, permit applications are in.
Okay. Do you think permitting's got harder in Canada? We saw a lot of narrative last year around ESG, and it was lots of funds rebranding themselves as ESG without actually meaning or anything, quite frankly. I think the SEC is coming down on them hard at the moment, and thank goodness for that. But for the companies themselves, your behavior probably hasn't changed. But in terms of the reporting and the time to get through certain components which matter to the permitting side of things, has it slowed down? Has it got more costly? Has it, quite frankly, in places got much more difficult for you to actually, think I think I see an end in sight? It seems like a sort of ever-changing organic challenge that you have in front of you on that front.
Yeah, I mean, that's a fair comment. I mean, what I think you're seeing, there is a couple of things. I mean, first of all, is that, the bar that you need to meet in terms of baseline data acquisition, all the work that goes into a permit application, looking at caribou, looking at water quality, looking at all these things. And it's sort of death by, everyone says, like, we're going to probably spend $20 million on permitting before all is said and done. A lot of that's already been spent. And people, how can you spend $20 million on permitting? And I'm like, look, there's not one thing you can point to. It's just a million little things. That bar every year goes up. Every year goes up. And so that's, an important sort of thing in terms of the overall timeline. What's interesting about the Yukon, I mean, so let's call it the S part of the ESG, working with the First Nations, working with the local Indigenous groups and communities. That's always been baked into the process. It's a unique permitting and environmental assessment process in the Yukon, where the First Nations are part of that process. So that's been there since day one. So that isn't new for us. So that's sort of good. So you hear proponents in the rest of Canada sort of, oh gosh, we've got to do all this new stuff. There's less new stuff for us. It's just that the bar, certainly has gone up. Does it make it harder? It makes it longer. And that's the frustration, because you have to do more work, you have more meetings, you have more experts involved with the whole thing. So it certainly does add some time. The good news for us, we've got a few years of permitting under our belt. We've done some really important things, particularly on tailings and mine waste. I think we talked about that, a couple of interviews ago. Our tailings facility is a tailings facility that was designed with the First Nations, with the regulator, with the government. That's why we had the feasibility study that cemented that in. So that's a key. That's always a big issue. That's, I'm never going to say it's water completely under the bridge, but some of the water's under the bridge on that. So now, we're moving on and looking at other things here moving forward. It's gotten more timely, more expensive. Has it gotten harder? It's still, it's government bureaucracy. You're jumping through hoops. Jump. You get there.
Right. Okay. So, but you guys need to be held accountable, right? Especially with big projects as well, because big projects could lead to big mistakes. So I don't think there's anything wrong, and you're not complaining about it. You're just acknowledging it just takes a little bit longer these days.
That's pretty much the way it is. Yeah, absolutely.
Okay. Hey, well, what's the next big thing we're looking forward to? I guess November.
That's going to be big. Obviously whether it's extended, whether it's not extended, whether something else comes out of that, we're going to have to say something to the market, and we'll have to press release something there. So, and that's, what is that? 3 months away here. So it's going to be an interesting 3 months here on our side, and hopefully we have good things to talk about at the end of November.
Cool. Okay, I've got a small complaint though. Do you mind? Do you mind if I put it forward to you? There's only 3 photographs of you in the PowerPoint presentation. I think Sandy needs to up her game, quite frankly.
Yeah, and I so love looking at pictures of myself as I'm going through. I'm like, oh God, here we go again. I know. I think Sandy needs to get better pictures of other people.
Yeah. Filters, and also filters. Paul, I appreciate the update. Like I say, you've been doing the hard yards, and I guess we'll kind of see the fruits of those or not in November, December with the Rio announcement. Come straight back on as soon as you know. Okay,
we will do. Absolutely. It's always a pleasure talking to you. Thank you very much.